physical inventory. This is happening by having an actual count or weight or measurement of inventory items that we have. Then we will just compare the actual count that we have or the actual measurement of inventory. We will compare it with our records to see if there is a difference. What about if we have, after like making a fiscal inventory, we discovered that there is a difference between our records and the actual inventory that we have in our stores. So let's have this example to see how we account for such a difference. Assume that at the end of the reporting period, the perpetual inventory account reported an inventory balance of $4,000. However, a fiscal count indicates inventory of 3,800 is actually on hand. So the entry to record the necessary write down is as follows. So the record shows an inventory balance of 4,000, but the actual count shows an inventory of 3,800. The difference might be caused by many reasons. For example, maybe we have like a stolen inventory for an amount of 200. So now what we have to do, in this case, we have to do a write down for inventory. So the inventory will be credited by 200, and we will debit inventory over and short. How this account inventory over and short will be accounted for in the income statement? Either this one will be adjust the cost of goods sold. This is one way to do it. Or for example, it will increase the amount of cost of goods sold, or some companies might report it in other income and expense. So either you debit cost of goods sold by 200 for this difference, or you record it in inventory over and short, and you keep this as an expense in other income and expense in the income statement. Now, about inventory, when we can recognize inventory. So the main rule for recognizing inventory, that inventory must be recognized at the time the company controls the inventory or the asset, which is the inventory. Most of the time this will be straightforward. So when you purchase an item and you get the item from the seller and you receive it, then you will own it and you will pay for it, for example. So it becomes under your control. But sometimes things are very complicated. Let's have some examples related to some issues that might cause a problem, and how we can decide if this inventory belongs to us or to others. The first one is called goods in transit. Goods in transit are simply goods that left the stores of the seller but did not arrive the stores of the purchaser. Suppose that I am importing, my company is importing goods from China, and my company is based in Jeddah. So maybe for the products to arrive to my stores, it takes maybe 1 month. So it will be shipped over the ocean, and it will take 1 month. So suppose at year end, now we have 1 million worth of inventory now on the ocean. So it's not in the stores of the purchaser, and it's not in the stores of the seller. So this goods will be called goods in transit. So who can claim, who controls these goods? Is the seller or the buyer? So the answer to this question is simply it depends on the contract between the seller and buyer. So if the goods shipped, so we have two types of terms in contracts between seller and buyer. So if the goods shipped FOB shipping point, so in this case, goods in transit will be owned and controlled by the purchaser. And if the contract between seller and buyer, FOB destination, then goods in transit will be owned and controlled by the seller. So for this type of goods in transit, any goods in transit, we should check the terms between the seller and the buyer. So if I am the purchaser and the goods are FOB shipping point, so it belongs to me. And if the terms FOB shipping point and I am a seller, then the goods doesn't belong to me. Same thing like for FOB destination. If I am a purchaser and the goods are in transit, if things are FOB destination, so I am as a purchaser cannot claim or claim that I control these goods, because the goods will not be owned or controlled by you until it arrives at its destination, which is the buyer warehouses. The second item, the second issue that might cause a problem here, called consigned goods. So consigned goods is simply sometimes you might ask an agent to sell the goods for you, but you did not actually sell the goods to the agent, but you asked him to act as your agent and to sell the products on your behalf. So now, if we have some of these goods now on consignment at year end, so these goods are not sold yet by the agent, but now it's in the agent stores. So it belongs to whom? Is it belongs to us or to the agent? And now we will, the entity that will ship the goods to the agent will call consignor, and the agent will call the consignee. So now the consigned goods belongs to the consignor or to the consignee. The answer to this question, always the goods on consignment will be controlled and owned by the consignor. So because the agent did not buy these products, he or she is only keeping these products to sell it on your behalf. So you still own it as a consignor. Okay, so for consigned goods owned by the consignor. A third item that might cause an issue with regard to inventory is sales with repurchase agreement. This type of sale, actually the essence of this transaction is a financing transaction rather than a real or actual sale. يعني في هاي الترانزاكشن ممكن اشرح لكم بالعربي على اساس ممكن شويه احسها ممكن صعبه عليكم. الان بالنسبه لهذا الايتم احيانا شركه تقوم ببيع الانفنتوري لمؤسسه اخرى، لكن مع عقد البيع بوقعوا الان عقد اخر باعاده الشراء بسعر مختلف في تاريخ مستقبلي محدد. طبعا الغرض عادة من هاي الترانزاكشن هو عبارة عن عملية اقتراض أو حصول على التمويل، هي شكلها شكل عملية بيع للإنفنتوري، لكن هي في حقيقتها وفي جوهرها ليست عملية بيع، لأنه أنا ببيعك أنت كطرف أول، مثلا ببيعك